Hello, everyone. Welcome back to the How to Trade Trading Room. I'm Shane Vernier, and this is the U.S. mid-session brief for our U.S. session live stream. Today, we're going to cover a lot of different things. We're going to take a look at this NQ. I'm looking at the E-mini NASDAQ chart right now, and we have a potential break, a late-day break developing here with the orb strategy. I'm going to go over that and potentially how to execute that. We've also got a couple of trade ideas to review. The dollar-yen we just put out, or excuse me, the New Zealand dollar-yen. We just put that one out a little while ago today. And then also the U.S. dollar-Canadian dollar looked like a near miss. We barely missed the entry on that, but I have to recap it because we had a pretty good market read there. We just didn't quite get our entry, and it speaks to discipline. It speaks to patience. Hardest thing in all of trading is to have an almost. An almost is really, really hard to deal with, especially when you've gone through a month like we have in the last 6 weeks or so. Given the Iran war, it's been sort of slim pickings to find trades that are high percentage that you have a lot of confidence in. They're out there. We've hit a lot of them, but I'll tell you what, this has been absolutely choppy today. Today's dead as fried chicken. There's not much happening here on the markets. I mean, it really is dead. We're seeing a little bit of action out of our U.S. oil, Brent crude oil, but honestly, it's well within the daily range. Is the ADR, the 13-day ADR that I've been watching closely on these charts. I mean, there's just nothing there. So for me, I'm watching very closely. We've got a couple of stories out. We had an assassination attempt over the weekend on President Trump, third one that we know of in the last 18 months. So. Things are changing. Things are always changing. I don't know that I've ever seen a news cycle as challenging as it is to trade as the one that we're currently in. So Bitcoin, we're going to look at Bitcoin as well, U.S. oil, Bitcoin, and those two Forex pairs, and then also the NQ. If there's any other strategies or any other markets that you'd like to look at, feel free to pitch them, throw them in the live chat. I'm more than happy to cover them. I think we're going to be up for a lot. There's a lot on our plate today, but it's a Monday. Monday psychology says game planning. Get our levels down, get our game plan down for the rest of the week because it is a big week, and we'll go ahead and preview the week ahead, what's coming our way as well. So good to see everybody back in the room. Kelvin, good to see you. Kelvin, welcome. Jason Maxon, good to see you, Jason. Peace right back at you, Jason. The world needs more peace right now. Tuku, good to see you. Bobby Bob, always a pleasure, guys. All right, let's dive into this orb. This is an opening range breakout strategy. If you don't know what I'm talking about, that's okay. Head on over to How to Trade com on YouTube. We've got all sorts of orb videos out, very, very popular videos. It seems like everybody on the internet has an orb video out, and they trade the opening range in a myriad of different ways. I use 2 bars. I think it's a pretty good way to be trading the orb. And if you're interested in a real true breakout strategy and a day trading strategy, a true day trading strategy, not a scalp, not a range trade, but a true day trade, taking a position and looking to get those bigger payoffs, the orb's a pretty good strategy for you. I like it. I think it's fantastic. Personally, I prefer a 30-minute orb, but this 15-minute orb's not bad. Opening range. So everything we do is predicated upon the opening range. This is the E-mini NASDAQ futures. You can see right here the opening 15 minutes of this range. Opening bell ding-ding on Wall Street. The second 15 minutes, nice big sell-off and then a rebound right up into the center of this range. And, I mean, this is really a challenging, very, very challenging environment because you have to wait. Now, remember, for an orb to be valid, we have to have a bar close outside of our range, and that's going to be our key to enter. At this point, it looks like if we're going to get a bar close, a 15-minute bar close, it's probably going to be above this unless we see a big-time news event hit the wire. So I'm watching up here for this close. Potentially, we'd love to see it close maybe just right in here above your range. I mean, if it does get elongated, then you can put your stop loss beneath the trigger bar or beneath the range itself. This type of trading, though, to be honest with you, what you would be shooting for is probably a good look at that sort of the opening highs. You can see this is what developed yesterday on Sunday. There's your open. You open down, and then a nice big rally there. A lot of buzz surrounding the tech stocks right now. The bidders came in, and then we saw this sort of stagnate, and then we rolled into that London session right in here. Essentially a little bit of a rebound, and then we sold off going to the U.S. session, and nothing's really happened here on Wall Street just yet. So if I was going to place this orb trade, that would be my top side target, would be the top of market structure right up there. I would ignore that, and I would shoot for that. It's probably the only way this one will be worth your while. Stop loss will be down here or potentially in here somewhere beneath your trigger bar. A lot going on there. We're going to give that a couple of bars to simmer. Perhaps we can execute this trade before we sign off this live stream, but very, very tight. Very, very tight on Wall Street. And when we're looking at the E-mini NASDAQ, there should be more action than that in the market, and there just isn't. So we're watching that one closely. I think that it's a pretty good place to begin. Really our diagnoses of the markets today. So Tina Zhang, good to see you. Tina, welcome. I'm confident you're doing very well. I got your questions from earlier, so I hope my answers helped a little bit. Some great questions, though, and it really spoke to patience. You know, the idea of, we all have an idea of where we want to be. I mean, me included. I mean, I have an idea of where I want to be. I've had an opportunity to travel a little bit in the recent years, and I'm actually heading out international style again at the end of May. And you get an opportunity to see how different folks live and the quality of life and, you know, the good things and the bad things all over. And when the more that you see, the more you realize that maybe your own personal goals could be adjusted a little bit, not necessarily down, but maybe up. I've had the privilege or the disprivilege of shopping for real estate and houses here in Western Montana. And when I was growing up, they couldn't give this land away. They couldn't give it away. houses. I was in that business a long time, and I went out and I saw exactly how much things cost now, and talked to some professionals in the industry, and I start looking at my trading, and I'm thinking, what do I have to get out of my trading to make this go? What am I going to have to make? That's the way you guys should be thinking all the time. You should be thinking, okay, once you learn how to trade, and you have a strategy, and you're patient, and you're putting the time in, and you're putting really the elbow grease and going for it in this lifestyle, it's got to be worth your while. Now, I always recommend that if you're starting out, or if you're a younger trader, or maybe you're a trader that doesn't have the big capital like a lot of folks say they do. Very few of them actually have it, but a lot of folks say they have the big money. If you're one of those people that doesn't have the big money to trade, you can start looking at trading big prop accounts to try to make that money, or you can use this as a supplement. And I always advise use it as a supplement. If you can go in there and pull an extra $200 or $300 a week off of the markets to supplement maybe your full-time job, or maybe you're a freelancer, or maybe you're driving an Uber, whatever. If it can help you, then go for it. That's what I always say. And then over time, you just level up and get to a point where you want to be in an opportunity really to reach your financial goals. It's absolutely huge that we don't get too greedy too soon, but it's also huge after you've been in this a while. And there's a lot of you that have been in this room with me for a long time. After a while, once you've got down what exactly it's going to take to succeed, you've got your strategy, you've got your discipline, everything's nailed down, and you're ready to go. You're a pro. You feel like you're a pro. You're a pro. Then you have to start looking at ways to make it worth your while. And that is different for everybody. I've been asked that question probably 1,000 times since I began doing these live streams and meeting with, taking one-on-ones and meeting with traders. The number one thing is, how much money can I make? What should my goals be? You hear that a lot. People don't really know what they want out of it. Sit down and know what you want out of this before you ever get started, and then you just build a path to get there. I know exactly what I want out of these markets, and I also know it's attainable given my resources. And as long as I make sure that my resources are in alignment with my goals, there's no conflict, and life's pretty good. As soon as my resources do not complement my goals, like I'm going in there with 5,000 trying to make 250,000 in a year, that makes you start taking risks you don't need to take. That's a huge, huge reason why many people wash out of this business prematurely. That's for sure. All right, we've got a lot to cover today, but I want to start off with a little Monday psychology. We'll talk a little bit about formal ways to approach the trading week next week. Today, we've got a lot on our table, so we're just going to get on with the current events and things. We do have a trade update here. U.S. dollar, Canadian dollar in play. Excuse me, pushed the wrong button. You can see that this one was a really good trade, and this was one that I was very confident in because of the Canadian dollar's correlation to WTI crude. We knew the Canadian dollar was going to make a move against the dollar. It was just a matter of when. When was it going to happen? Well, it happened today. So we were sitting pretty right up here at 38%, looking at 137.25-ish. I loved 137.25. I thought it was really a robust resistance zone. And Friday's high, we were almost there, 137.14, and then we just pivoted off of that and reversed. And today, the route has been on to the downside. We've seen a drop of about 100 pips, somewhere in there, about 84 pips. We're back beneath the 136 handle, and now this market is starting to really open up the throttle to the downside. So there's going to be a lot of different things that we can do to trade the dollar CAD. We're going to go into them later this week. But this 13-period EMA, I'm watching closely. But this right here is a textbook downtrend. There's your move. There's your pullback. There's your another move. Boom. Pullback failure before 38%, and now we're coming off. So for me right now, I mean, it's all systems go to really to the south. A lot of smart money concept traders are going to be looking probably at that area right there as being a potential liquidity sweep or an area of support, maybe a demand zone. So that low down there's 135.25. I don't hate it. If you wanted to buy 135.25 down there, I really don't hate it. It could be a pretty good play for you, 135.50 to 135.25. In my view, though, that's a scalp. That's a scalp. I don't think you take a position from there unless we see some evidence maybe on a longer time frame. And we'll be breaking this down on Tuesday and Wednesday, actually. BOC Speaks Wednesday. We're going to go ahead and break down the week that's coming our way here in just a few minutes. But maybe a 4-hour chart. If I was very, very serious, I said, okay, I love the way this is going. Bearish, we broke. We're not bullish in any way, shape, or form. We see WTI crude oil sort of stagnating right around $97. Extremely bullish. I mean, extremely bullish. We were thinking potentially peace deal over the weekend. Didn't get it. Trump called the dogs back. They had everybody going to Islamabad. Pakistan, he got on the horn, called them back. No negotiations, no deal. Now, supposedly there's being deals floated all the time from Iran to the United States, but by who? I have no idea. I didn't even know leadership was still breathing over there. I have no clue what's going on, and nobody does. Nobody outside of the Trump administration and those negotiators and the folks they're talking to in Iran have one idea about what's happening with the negotiations. I'm sorry. Anybody that says they do, they don't. Nobody knows. And it's an incredible secret that they've kept thus far. Pretty impressive, really, for this day and age. The day and age of technology, right? It seems like every day we are blown away by a new news story. Surprised they don't have insiders juiced into these negotiations, but I haven't seen anything. I really haven't, and I've been looking. In any case, 4-hour chart, 38% level right there at 136.29. Maybe a 25 sell. Potentially could be a nice 10 to 15 pip scalp for you. You'll notice one thing that I want to highlight here. The spread with this Canadian dollar is only at about 0.2. So if you're serious about potentially, 0.2 pips, if you're serious about potentially taking a scalp, this is a damn good pair to do it. That is an incredibly tight spread. So you could theoretically step up and sell 136.25s and maybe look to make 5 to 8 pips and make it worth your while. You still up your leverage just a little bit. This would be a trade where we're looking for immediate positive price action. So if you do take that short, we don't want to see the market really blow against us. We don't want to see the market really blow against us up over 136.29. So it's a good level. It's a 4-hour chart. Clearly the throttle's down to the downside. We've seen a little bit of a rally here during the U.S. session, but as far as I'm concerned, that is very, very strong crude oil. We've got the Fed ready to speak on Wednesday. We've got the BOC ready to speak on Wednesday. There's a lot going on here with the dollar CAD. It's definitely going to be one of our picks. A quick programming note. Our newsletter will not be coming out this week on time. We have some folks that are actually out there. They work abroad and they're out of the office, so we're going to be getting that out as a midweek update. So this week, instead of the Switch On newsletter, where you've got that ready to go for the Tuesday session, it's going to be ready to go for the Wednesday session, and also we'll put out our picks of the week tomorrow night as well. So you'll be ready to go with everything that we think ahead of the central bank meetings, and I think it should be a pretty good instructional exercise checking out our newsletter. So feel free to get in on that if you haven't already, and if you're a Switch Markets client, I believe that's emailed to you directly. But if not, you can always reach out at Switch Markets, and they'll get you hooked up with the newsletter. All right, let's see. We got a couple of messages here. I got way behind on the live chat. Lebo, good to see you. Lebo, welcome. Hi there. Happy to be back. Haven't been here in 2 to 3 weeks. Okay, my first question. I like questions. If I can help you, I certainly will. Is swing trading, positional trading, and low-frequency trading the same, or do they differ, and what's the difference? All right, so the biggest thing that I would say about the difference between all those, they're pretty much words for the same thing. Essentially, what you're doing when you take a position, or when you swing trade, you take a position trade. And if you're position trading and swing trading, those are all lower frequency trading than, say, intraday, where you're looking at 3 or 4 or 5 trades a day. So that's the first thing I want to say, Lebo. Essentially, yes, they are the same thing. Now, if we want to argue, and then maybe there's influencers out there that want to sit there and say, no, Shane, positions are a lot different than swing. And I'd say, well, okay, theoretically, we could take a position on an intraday basis, and that would be a true day trade. So in that way, we could say, okay, well, I'm net long for the day, and that's my position. But it's semantics, Lebo. I wouldn't get caught up with too much of that. What I would focus on doing, swing trading, you're looking at least going through one market closure. So you're going to at least hold it through one overnight. A lot of swing trades go a few days. Some of them go a few weeks. That's how I view a swing trade. As far as a position trade, I could be a position investor or a trader. But if I'm a position trader, all that means is I'm either long or short at a given point in time. That's all that means. And low-frequency trading, I don't know. I mean, I've never really even heard the term low-frequency trading. I think that you could say that's investiture. You could say that's swing trading. Don't get caught up in the nuance and all these buzzwords you see online. A lot of it's just marketing bullshit. Pardon my language. But swing, going through one market closure, intraday trading during the day, and then high frequency or scalping. I prefer scalping. Scalping is when we're just looking to take a few ticks over and over and over again. That's it. That's really all there is. Ralph, good to see you, Ralph. And, of course, investiture, where we're putting our money in for a couple of years. That's all. Good to see you, Pack. I'm good to see you. Kelvin, are you on Discord? No, I'm not. I'm not on Discord. I probably should be, but there's only so many hours in the day. Pack, how come the US 30, let me see, went upwards, went upward while the NASDAQ 100 went in the opposite direction? Well, a lot of it has to do with big tech. I mean, a lot of it has to do with just the impact of big tech. I believe we have some earnings out this week, if I'm not mistaken. So if you're looking at the US 30, this is a fascinating chart, right? Here's your 15-minute chart. If we were going to rock a 2-minute orb on this US 30 chart, you'll notice just how tough life is right now. The market isn't moving. So if you're trading an orb and you're doing it on the US 30 opening range breakout, you're short right there, and life is not really great right now. This trade's gone against you significantly. You're drawing back into the trading range. Not really a good sign. We wanted to see maybe a couple of negative prints and get a big run. That's a 15-minute orb there on the US 30. I would say that is there, to me, they're fairly correlated on intraday basis, at least for today. They're both flat. Essentially, they're both flat. I mean, the Dow, I believe, is off about 100, but, I mean, that's still relatively flat. This is why I really favor a 30-minute orb, realistically. I mean, it's still basically the same type of thing, same type of market dynamic, but you don't deal with all that chop. So right there's your opening 30-minute chart. There's your inside. Next bar, opening 30. Or your opening hour, right there's your range. So there's your sell. Basically, it didn't change anything from the 15. Interesting, though. Is this trade in good shape? No, it doesn't feel like we're going much of anywhere here today. So why is the US 30 going straight up while the NASDAQ, you must be talking about the open. So there's your open right there. Let's go to our NASDAQ, our US 100, and there's your open right in here. Yeah, and it just has to do with the strength of tech right now. That's what it has to do with. We're just looking at big tech. I believe there's some earnings out this week as well. A lot of folks were hyper-focused over the weekend on NVIDIA. Everybody thinks NVIDIA is going to go to the moon, and maybe it will, maybe it won't. I mean, there it is today, 30-minute chart. I mean, that's a big move, 177 up to 182 on an intraday basis. Let's take this to a daily. I mean, you can see what we're doing right here. If you're trading NVIDIA, I would definitely be looking at that level right there. There's your high back on the 3rd of November, which is up around 183.32. Right now you're printing 182. I think we all are pretty much looking at $200 for NVIDIA. I believe that that's probably where the institutions may be taking some of their profits off the board. At this point, if you're long, there's really no reason to doubt yourself. You're going to take that double top out. You're challenging it right now, 182.22, somewhere in there. What is this swing high right there? 183. I think more than likely we're going to blow through that and go to 200. I would almost bet on it at this point when it comes to a stock like NVIDIA. So a lot there to trade, a lot there. Everybody's talking NVIDIA right now. Let me see. Hope that helps you pack up with the disconnect between the NASDAQ and the US 30. All right, let me see. Lebo, thank you very much for your response. I was told that swing trading is up to 7 days. Positional trading is longer than 7 days. I mean, yeah, whatever. I mean, I'm not going to sit around and argue about day counts with somebody that knows exactly. I can tell you swing trades can go for a couple of weeks. I mean, it is what it is. I'm not going to argue semantics about something that is sort of philosophical and theoretical in the first place. Trading is theory, guys. Trading is theory. Every time we place a trade, we use our technical tools, we evaluate our fundamentals, and we fall back on our gut and our experience to try to figure out what a good trade is. And because it is not an exact science, the outcomes are wildly random sometimes, even though you do all your homework. It really puts trading in the realm of theoretical. And anybody that sits there and says, no, this is an exact science and this is how we do it and yada, yada. Hey, listen, the only thing that could ever make trading an exact science is if you have very specific concrete rules. And if that is essentially the science. All right. That's it. The rules. You're either going to win or you're going to lose. Well, I mean, my system didn't generate great returns. The problem is, guys, the problem with all this stuff is it's theoretical. Every time we place a trade, it's a theory. Now, there's things I believe in. And there's things that I think that are going to be relatively strong over the long term. And I know technically which indicators I really prefer that have worked for me for years and years and years, but they don't work every time. Right now, I've launched into AI or dove right into that ChatGPT 5.5 because I want to fine-tune my performance. I want to see exactly if there's any tendencies that I'm missing on my stop losses, because the name of the game is to get out of this when you're wrong. And if you can get out fast, the faster you can get out when you're wrong, then you have an incredible opportunity to succeed. AI can really help us do that. Now, is it all theoretical? Yeah. Every trade you take is a hypothesis. You're doing the best you can reading your technicals. You're reading the fundamentals. You got your economic calendar up. You understand macroeconomic cycles. You're trying to get the job done. It's all a hypothesis because even though you may have the strongest setup in the world, it can still lose. it can still lose. So that's why I say anybody that speaks in concrete terms about trading being an exact science is full of it. Believe me, we're not out here kicking field goals. We're out here trying to score touchdowns, and there's a lot more to scoring touchdowns than kicking field goals. If you're an American football fan, you know what I'm talking about. All right, here's another trade update here on the Kiwi Yen. This is a big one. We've got some key events we're going to go over that are dropping during that early Tuesday Forex session, and that's going to be the Bank of Japan getting involved with a little bit of interest rate decision. I think it's going to be fantastic. I think they're going to go hawkish, but they're going to hold interest rates the same, but they're going to be very hawkish. At least that's what we gather. So this trade idea has got the Kiwi Yen, really a basic trade idea. We're looking at 2026's high that we established earlier this year is right up there, right around 95. You can see that one came across the board in February. This pairs up about 5% on the year. The Kiwi really putting on a show against the yen, which surprises me in a lot of ways, but in other ways, not really. I mean, the Kiwi traditionally has been a relatively strong currency. There have been times when the Kiwi was the carry trade of all carry trades. People would just buy New Zealand dollars and sit on them. Now, a little bit different. The game's changed a lot, probably since the 2015s or so. But what we're looking at here against the yen is really a tremendous rally this year, about 4.5%. And we're on the march north again. So when we look at the daily, you're up about over 0.5% today. BOJ gets involved tonight. We're going to launch into that in a second. But you've got a really great level up here. And I'm a sucker for natural support and resistance levels. I really am. I mean, if you've watched any of my live streams, you know I'm always talking about big round numbers. I'm talking about technicals that coincide with big round numbers. When that happens, we've got an incredible opportunity to succeed in the market. So 2026's high right now is at 94.97. Maybe a little bit different according to your brokerage. This is Owanda data here. 94.97 is right around 95. It's as basic as it gets, right? The sellers defended 95 before. Typically, they'll defend it again. But eventually, there won't be enough sell-side liquidity from that zone to drive us down. So we put out this trade. It's looking at about a 50-pip scalp. It's not a scalp, excuse me. This would be what I would consider a short-term position. That's for sure, Lebo. If I was talking about, okay, taking a short-term position, this would be probably it. I would be looking to get paid off maybe in a day or two. So a lot of folks would say, okay, that's a swing trade. No, it's not really a swing trade because I'm not committed to a given period of time. If we go up and test 95 and fail on the BOJ, then I'm definitely have no problem getting out of this trade in just 30 minutes. I don't care how long it goes for. I just want to see a nice test of the 95 area, and then I want an opportunity potentially to sell from that zone. I like it. I really do like it. Now, if price does break above 95, then we've really got to consider getting out. I mean, you can hold a little while, maybe lay it. I think our stop loss, we don't put stop losses out, but we're looking at about a 50-pip move here either way. So if you're going short from, say, 89, 50 pips from there, you probably should be looking to get out somewhere up over 30, 95, 30, somewhere in that zone. But this right here, I'm looking for that short-term rejection of this zone. I think it's there, anywhere from 25 to 50 pips. I think we'll go ahead and shoot for 50 pips, put the trade on and manage it. That's what I'm going to be looking at doing. And the catalyst behind this trade, what's going to drive the market realistically is going to be the Bank of Japan. Are they going hawkish? Are they going dovish? Well, typically the BOJ loves to be a dove. I mean, they're a flock of doves, but times have changed. And there's a lot of pressure on the the BOJ right now, Bank of Japan. So we're going to talk about that in just a second as well. Got some more questions over here. If you have any questions at all, be sure to throw them out there. All right, we got a few questions. Fantastic. Let me see. Pack up. Yeah, thanks. That helped. I was just confused since they mostly move in similar direction and opposite to gold. Yeah, right now the correlations have broken down, Pack up. They really have. We are seeing the NASDAQ go on its own. And a lot of that has to do with artificial intelligence. We talked about that Friday a lot. But it looks to me like AI is going to dominate everything potentially in this world. I mean, we just don't know yet. But I think that we've got an opportunity to make a few trades along the way. The Dow 30 in a bit more difficult position because of the war. A lot of these companies are brick and mortar and they're conventional. And what that does is that makes them reliant on conventional supply chains. So something like the Persian Gulf is hit. There's a few of those companies in the Dow 30 that are going to kick tail. The guys that are in the defense sector, the aeronautical sector, those guys are going to win big. Also, maybe in the oil services sector, the oil industry, those folks are also positioned to win. But the rest of it, everybody that's dependent on the energy is going to really struggle. And those Dow 30 companies traditionally do really have that deep brick and mortar infrastructure that we don't really talk about much anymore because AI has completely, I mean, think about it, AI and cloud computing. I mean, half of this world we can't even touch or see anymore. Hey, you wait. You wait till you get to be an old guy like me, 47. I was talking with another guy you guys know that worked on this channel for a long time. We were talking about how many years we've been in the market by now and had a good laugh over it. So when you've been around for a while, and let's say, you're born in 79 like me, the concept of AI, a lot of you that are younger, a lot younger, you have an opportunity to really dive into this and adopt it and grab onto it, and it won't be so foreign to you. To me, I mean, I'm excited by what it can do, and I'm sort of hip to its potential. But man, I'll tell you, just the concept of AI and cloud computing, I mean, it's still a lot. It's still a lot. It really is. So we'll see exactly where all this lines up in the future. Let me see. Tina Xing, got a question from Tina. Good to see you. Welcome back. Always a pleasure. My broker recommended buying coffee. I like coffee. Drink a lot of it. You could probably just buy whatever stock is sending it to my house every month, and you're going to make money. My coffee consumption is certainly robust. All right, let me see. My broker recommended buying coffee. It was quite bullish now and had some pullback, looking like starting going up. Please have a look at the chart. Absolutely. I can't wait. We'll look at, let me see. God, there's so many different coffees. I think, what was that? Coffee C futures, I believe, is on the international exchange. Yeah, let's go ahead and pull a Coffee C. And they've also got CFDs you guys can trade in Europe. Here in the United States, we don't have that. Yeah, Coffee C, which I believe is on ICE, the Intercontinental Exchange. All right, let's go look at the monthly chart. This is just straight coffee. That's the big one, Coffee C. Let me see. Coffee Arabica. Is there a specific kind? All right, let's go ahead and pull it. So your broker, it was quite bullish now and had some pullback, looking like it was starting going up. Well, I mean, we must, he could be looking at a different brand of coffee maybe, or a different type. Maybe it's Arabic. I don't know. But this right here has been a little bit of a downtrend. What he would probably be saying, and what your broker would be referencing, ideally it would be this great big rally that occurred there from about 2023 to 2025. So you can work right down from like that swing low, and that's really a macro look at your coffee market. So if it's 28.8, he wants to buy in right now. I mean, it's the 50% level of that macro range. I think you'll get a better deal. But I'm not going to butt heads with the broker and the institutions. Maybe they know something I don't. But I probably would be waiting. What I don't like about this is the consolidation right around that 50% level. So if this in fact is the correct chart, which Coffee C is the big dog, you'd be looking at something like this. Spike high to a spike low, very bearish on a monthly. So you're looking bang, bang, and then you're coming off right here. So potentially, if you're looking for a longer-term play, I would wait for like 25.5 maybe to come into play. But it's really hard to see coffee going down. There was a lot of coffee issues stemming out of the Persian Gulf, believe it or not. So let's go down to maybe a daily, see if we can get a look at what exactly. Yeah, that's Chop City right there. Absolutely choppy. If you wanted to go long right now, I would at least wait till you get down and maybe into this tail, maybe 28.250, something like that. But from a long-term perspective, I always find it really instructive to use the monthly. The broker may also be looking at that swing low. A lot of folks love market structure. It's a religion to them, and that's great. I really don't have any problem with it. I really don't. This area right here, this low right there around 27,672. That's back in July of 2025. Potentially, we've tested that low several times. Now we've got some compression, but it's still bearish on a monthly. So if we do break that, if we do shadow that and come off a little bit, we're not just going a little bit lower. We're going a lot bit lower. So I love working spike to spike, and you can see we could probably work a Fibonacci from right there in November 2024. But I would be smart about this, and I would take the entire range into context. Beautiful double top up there, right around 42. Fantastic. Compression right at 50%. I mean, a lot of demand there. A lot of demand last time down. I think that's a judgment call, Tina. I would have to leave that one up to you. That's for sure. All right, let me see. Kelvin, do you only post live on YouTube? If not, where can I follow you? You follow me in a lot of different places. I mean, I'm live here on YouTube. We're live in the How to Trade trading room. You definitely could cruise on over there and check out all of our materials. I'm also live on my X account, ShaneV_trader. You can find me there. That's pretty much it. No, I'm live on Facebook too. I think we're live on Facebook. Switch Markets on Facebook. We go live there, and I think we're still going live on LinkedIn. I'd have to talk to the manager, something like that. All right, let's see here. 512 Eli, good to see Eli. There used to be Ask Jeeves back in the day. I remember Jeeves, Eli. I remember Ask Jeeves. Let me see, Tina, the weekly chart. Yeah, let's take a look at it. If you have an exact contract he was looking at, that would help me too. Okay, yeah, I mean, this isn't bad. I mean, basically, I see what they're saying. Essentially, Tina, it's the same idea. So there's your demand zone, right? You hit it again. There it is again. And so we're sort of rotating. So they're thinking that we're going to rotate back up. It's trading up to 288 up to 250 or 355 yesterday. Yeah, right there. High was about 355, somewhere in that zone. Interesting market. I mean, I always talk about the old pit traders that I learned with. A lot of these guys used to trade coffee pits. They would hit the coffee pits. That's for sure. And they said the coffee pits were wild. Got a question from Ralph H. over in the How to Trade community. Do you like the Morningstar candlestick pattern on this daily? Kiwi yen. Yeah, let's look back over to the Kiwi yen. Let me see. Morningstar daily. So I'm thinking you're seeing a Morningstar right there, potentially. You know, for a Morningstar, I would be looking at something more like this and maybe like a real tight doji and then a break. You could say this is a Morningstar. Let's go to a 4 hour and see if there's a better Morningstar there. Not really. Okay. Yeah, I mean, if you want to qualify it, what I would be looking for there, Ralph. It's not I mean, you're not wrong. I mean, technically it is. You've got the big dump. You got a little bit of a rally. There's the big dump. There's your tight bar, and there's your big bar. So the idea is that potentially this could be a reversal pattern. If you remember, we did a ton of work on candlesticks. It's over there in the How to Trade community. A lot of our academy, our trading academy, I went into deep dives. There was like a book we used that told us all about the candlesticks and had the research and numbers and everything. And one of the things about these patterns, I can't remember the guy's name that wrote the book. It was like the Encyclopedia Chart Patterns or something like that. We made the videos. The videos are like 25 minutes long. In any case, we came in here, and one of the things that he found numbers-wise about these patterns was, it's supposed to be maybe a breakout or a reversal. The biggest thing to remember about a pattern is that, the price is going to move either way. I think that probably if you wanted to play this type of a pattern to the bull, I really don't have a problem. Let's say we close right in here, 94.28, and you want to say, okay, I'm going to take a position looking for 95. I really don't hate it. I don't hate it. The thing you have to be worried about is the BOJ getting involved tonight. The Bank of Japan can really make this type of pattern a difficult thing. But we're talking about position trading earlier. So if you take a bid and you stay in the market based, you're really predicated upon this Morningstar, and you're looking for that bullish rally, you're really, you're at the mercy of the BOJ. If they come out and say something that surprises everybody, charts are going to go crazy, and it's going to be really tough to win the trade. However, it may work in your favor as well. And what I say is, as long as you have the stop loss, which should be somewhere right down beneath the pattern, then you can take a shot. It's about 100 pips. As it stands right now, it'll be about 100 pip risk. What's our out right there? 93. I'd probably be right under there beneath 93 and a quarter. So about 100 pips. It's not bad. I'm happier scalping to the short from 95. But if you want it, it's all systems go. If you like it, go for it. I don't have a problem with it. It's there. It's not the strongest one. I would personally, the way that I trade, I would want to see that Morningstar develop potentially outside of my lower Bollinger Bands. That's where I would like it, but it doesn't have to be. This is actually with the trend, so it's could be a continuation. You would be viewing this in a continuation context as opposed to a reversal. I hope some of that makes sense. That's for sure. Let me see, Lebo. What do you got, Lebo? Is it true that trading is going to be regarded as an e-sport in the near future? No kidding. I haven't heard that. I read an article online where there will be trading tournaments for huge cash prizes. Well, sign me up. Like a trading World Cup or something. They already have big trading contests, but if they put it on TV and televised it, I could definitely see, and then you could bet on it too. So I could see it turning into something. Essentially, that's what we are here. We're financial athletes. I've taken almost exclusively my experience from the athletic arena and put it into trading. That's my skill set, I mean, was derived from my mentorship, but my habits, my competitive nature, the discipline end of it really does all come from my formative years as an athlete. And that's I 100% see the parallels between trading well and being a successful athlete. No question about it. I wouldn't really equate it to a team sport, but it's definitely like a tennis or a golf, something where you're going against yourself. 100%, no question about it. I would love to see that. I'm sure. Who would excel in that type of environment? There would have to be all types of classes. You'd have to have scalpers. You'd have to have probably a lot of guys are just going to want to automate. So if it's going to be discretionary, that would be fascinating to watch people place trades in real time as opposed to just watching computers spin. That would be great. I'd be in. I'd be watching that all the time, watching the traders and what they did. But yeah, that's fascinating. I'll look into that, Lebo. That is fascinating stuff right there. Packham, what is the difference between options and futures? Too many to list, Packham. An options contract gives you an opportunity to essentially what you do is you pay a premium to have the right to buy or sell a contract at expiration from a certain point in time. You pay an upfront premium. A futures contract, what you do is you buy, you essentially you reserve the right to buy or sell a product at a certain point in time, but you're actually buying a given quantity of that product. You're assuming rights to that quantity of product. So let's say we're trading crude oil options, and you wanted to say, okay, I want the right to sell $100 crude oil in July, then you would go in and you would buy calls. I believe you'd buy calls, or no, you buy puts, excuse me. You go in and buy a put contract, and that would give you the opportunity to sell at 100 at a future point in time, and you'd have to pay a premium up front for that right. And as long as price was, within relationship to your strike price, then you can make a profit. Options trading is difficult. I'm not going to lie to anybody here. A lot of people believe options trading is a get-rich-quick scheme. Good luck. Those guys are very, very good at pricing options contracts. It can be done. A lot of folks trade options, and they make a lot of money doing it. I've never really dabbled much in options. I've done some with stocks, just sort of gambling on it. But to me, I like reading pure price action. And when you introduce the quotient of time into a contract like options, where you get up against expiry, you get up against all sorts of different kinds of risks. As the clock runs out, it gets really hard. It gets really hard. So feel free to dive into options. I haven't done much work. We don't talk options hardly at all on the live stream, just because I like to keep it simple. And honestly, I know simple. Price goes up, price goes down, and all we have to do is sell high and buy low, right? Options are different. You have to figure out where price is going to land at a certain point in time. Futures, sure, there's an expiration to the contracts, but typically we're day trading them anyways, so all we got to do is be flat by the end of the session. That's it. Options are tough, guys, but yeah, exactly, right. What's it called? Was it Delta? Is it Delta risk? Is it Alpha risk or Delta risk or Sigma risk? I can't remember. It was one of the Greeks that was the time risk. Theta risk? I don't remember off the top of my head. Did a bunch of work with them, writing-wise, but I don't really use them. They can be a powerful part of your portfolio, though, no question about it. If you know options, you can make a lot of money, that's for sure. To me, they always just seemed a little abstract. Who knows? Maybe later in life I'll get into options. That's for sure. They lose value the longer they go. Yeah. What is that's going to drive me crazy? It's time risk with options. What's it called? Theta decay. It was theta, the last one I said. Theta decay. Time decay, theta risk. All right, got it. See, AI is a beautiful thing. All right, let's take a look at the week ahead. Week 18, 2026, trading week 18. Monday is going to be all about the Iran war. We're going to talk about that in a second. No real big developments. The weekend news cycle was dominated by a different story. Tuesday, Bank of Japan. That's coming during the overnight. We're going to preview that event. That's going to be early in the Forex session, the Tuesday Forex session. CB Consumer Confidence. That's a big one tomorrow. Might want to circle that. I'm thinking of covering that one live. We might get a pretty good market pop. We may be going early tomorrow. I'm not sure just yet. Wednesday, Bank of Canada. Bank of Canada interest rate announcement, and then also the Fed interest rate rate statement as well. Wednesday's the big one. We've also got durable goods orders. We've got CPI out of Germany. There is a lot going on Wednesday, so definitely buckle up. That's a big day in finance. We'll have FOMC live for you. When the Fed goes live, we will cover Jerome Powell, probably his final presser as Fed chair. And it's, see you later, Jay. I've had enough. I've sat through so many Jerome Powell press conferences, guys. I'm tired of it. We need some new blood. So, happy trails, Jay Powell. Enjoy your millions. Thursday, Bank of England. Bank of England is going to speak on Thursday. That's a big one as well. GDP, U.S. GDP, and core PCE, big numbers. And then Friday, the ISM manufacturing PMI. Honestly, it's another no donation Friday. I don't see the ISM shaking up market valuations much at all. That's my view. We'll see exactly what happens. But I'm thinking about covering the CB Consumer Confidence live tomorrow. I need to look into it, though, first and see if it's worth doing. All right, news of the day today. Not much. We have the 2-year note, T-note. Remember, these are U.S. Treasuries. This is the U.S. government essentially putting out their shingle and taking donations to fund the war effort. What is it? The 2-year note auction, 3.812%. That's down quite a bit, actually, from 3.936%. So all of a sudden, we know that, we don't know for sure, but we think Kevin Warsh is going to be in as Fed chief. We think there's a real chance to maybe get a rate cut towards the end of the year. We're going to talk more about this as the week unfolds. 6-month T-bill auction, 3.59%, stays firm from last week. So we saw the big rise in interest rates, big rise in T-bill yields after the war effort began in the Middle East, and now we're starting to see the markets sort of solidify, and that's exactly what we want as we roll into May. All right, news of the day, Bank of Japan monetary policy statement. The BOJ interest rate decision coming in at 0.75%. We believe that this rate is going to stay unchanged. That's going to be absolutely huge for the yen. But what's interesting about this is that we've got some key levels to play with in this dollar yen, no question about it. This is one that I really like. We didn't get anywhere near it last week. Maybe Tuesday's the catalyst to give us a shot. But big picture, what is being reported at this hour about the Bank of Japan is that they're going to temper expectations. They're going to tell people essentially, because of the energy shock produced by the Gulf War, they believe that they may have to raise interest rates once, maybe even twice this year. They're going to be very hawkish, supposedly. Now, that's what the word around the campfire is. I read it in Reuters earlier. I put that out in our trade ID. I wrote the situation up. It's going to be interesting because they're going to hold rates firm at 0.75%. Then they're going to say we will not hesitate to raise rates again. They're also supposed to cut their growth forecast and raise their inflation expectations. So what we have developing here is we've got a situation where the United States wants to cut interest rates so bad it can taste it. And you've got Japan, which is like, we're in big trouble here. We're on the tipping point of major inflationary bubble. It takes a lot. And I mean a lot for the Bank of Japan to raise interest rates and hold them in positive territory for any period of time. And that stems back to the deflationary crisis that they had coming out of 2000 and 2001. Bad times, really tough times, and the way they fought out of it was to devalue the currency, pump the system full of yen, make those exports hyper-competitive abroad, draw in foreign investiture. That's how they did it. So for Japan to start being in a rate hike cycle as opposed to a rate cut cycle when the rest of the world wants to just hold them firm or cut them as fast as they can is a fascinating dynamic, and it has to speak to the positive nature of the yen moving forward this year. However, throw the war in there, stir up the pot. What do you get? I mean, you get roulette at this point. Nobody really knows which way this thing's going to drive. I'm sort of on the side of the yen here. I think the yen's going to make some hay on the U.S. dollar. Maybe not today, maybe not tomorrow, but I think later on this summer we could definitely see that. We could definitely see a stronger yen. So I love this level right here, 38% on this weekly. Beautiful market structure, spike low, spike high, compression for about really since the war started. Since the war started, that's a lie. Since April, excuse me. That was not a lie, but a mistake. The war started right in here, and then the U.S. dollar blew up, and then right here through April. Now we've seen price stabilize and stagnate. So we're going flat there. Maybe a pullback to 157.50-ish. Pretty good level. I would be watching my moving average, my 13-month EMA at 158. That would be my 13-week EMA right there. That's a big one coming into tonight's big event or tomorrow's big event. 158, maybe 158.09s. If you get an opportunity at that after the BOJ, it's going to take a lot to get established beneath that moving average. It really is. So that's a pretty good level. I'll be watching that one closely. We'll be keeping an eye on that trade as it develops. I think that I think we're going to get a shot at it. I think you're going to see a real hawkish BOJ. Whether it shakes the yen up a lot or not, that sort of remains to be seen. That's for sure. All right, we got a couple other things to go over here. The BOJ is the big one, though. I want everybody on their toes for that. As far as what we should be looking at with regards to switch markets. Remember, if you want to trade anything here, be sure to, I forgot completely about putting our switch promo out there, but trade thousands of global markets. They've got thousands of them. Upgrade to that MT5 platform, and there literally is thousands of markets there that you can trade at any given time. It's an incredible diversity of options. It's far greater than what I can trade here in the United States. So you've got an incredible in. I've been watching the spreads there. The spreads, Bitcoin against the dollar, that's a pretty sizable spread, but look at that, US 500.8. That's a nice spread. You can't beat that. So that's pretty good stuff. Take a look at it. Take a look at the suite of also free resources and things, the tools, the resources, the tools, the EAs, really everything you need over there to get started is locked and loaded for you. So pretty good stuff over there at Switch. All right, guys. A couple things to cover, then we're going to sign off. If there's any more markets you want us to take a look at, go ahead. We're going to look at Bitcoin here in just a second. But White House says Trump stands by Secret Service, a shooting suspect due in court. This was a big deal. They had the big media, sort of like a roast. It's where everybody tells jokes and makes fun of each other. But they had most of the United States cabinet in there. They had Trump in there. They had Hegseth in there. They had Rubio in there. They had the vice president, J.D. Vance, was in there. There was a lot of heavy hitters that were at this dinner. And essentially what happened was a gentleman decided he was going to storm the fort. He had been staying in the hotel for 2 or 3 days. They had this at the Hilton in D.C. It was not in the White House or on the grounds. So security, you always have to question security. It's sort of an external venue. But security, there's a lot of criticism out there, but these guys did an amazing job. In any case, this gentleman was staying in the hotel for a few days. He was a video game designer out of California. They say that he's a pretty smart guy. Tried to storm him with a shotgun, a couple of handguns, and I think some knives. Ran right by the Secret Service checkpoint. If you guys haven't seen the video, it's pretty amazing. The guy was moving pretty fast. Ran through there, shot a Secret Service gentleman who was okay. That's great. And then they took him down. I don't know how they took him out without shooting him, but I guess they didn't shoot him. I guess somebody tackled him. In any case, he didn't make the big venue, but it's been just an incredible hubbub here in the United States. People talking security. A lot of folks online believe it was staged. I don't know, guys. You're playing with real bullets and things. I don't know who signed up to stage an event like that, but it's none of my business. I'm not even going to speculate on that. But this was potentially a big event, and this brings in the geopolitical risks that we always try to figure out. Every Friday I submit a risk assessment, and I submit a risk assessment over to the folks at Switch in the back office. They say, Shane, what do you see as being potential outlier risks? Things that we may haven't thought of. And that really is what risk management is, guys. It's about spitballing ideas. And a few of the things that I've been talking about in those assessments, of course, Iran war, a sudden peace could bring volatility just as much as a sudden escalation could. We talk about things like what would potentially a tactical nuclear weapon do? What would that do to the markets? What would be roiled? Events, external events, one that we're going to have to talk about later this year. And you guys are going to think I'm wearing a tinfoil hat and I'm crazy. But supposedly they're supposed to have alien disclosures. The United States government's supposed to disclose everything that it knows about extraterrestrial activities. I don't think anything's going to come of it. But if there's a blockbuster in there and they admit that, okay, there is aliens among us or something like that, the markets are going to go crazy. The markets are going to go crazy. So we're starting to talk about external risks. And one of the risks that I've had on the books for a while has been a political assassination of not just foreign leaders, but Trump. Since I've started doing this podcast, we've had, or not this podcast, but this live stream, we had the assassination of Shinzo Abe in Japan. A gentleman shot him with an improvised shotgun. He had a pipe and a shotgun shell and hit him from what was 50 feet away. Shot him in the back, killed him. Shinzo Abe was one of the biggest leaders in Japan forever, long time. Widely respected man, is given credit for the Japanese recovery in 2012. So Abe was assassinated. Bolsonaro in Brazil was stabbed. He was almost assassinated. There's been numerous Eastern Bloc countries where the leaders have been either shot or assassinated. We've seen 3. This will be the 3rd. They'll consider it an assassination attempt. This will be the 3rd separate assassination attempt against Trump. My point is this. This is the world we live in. If somebody like Trump if that does come to fruition, and it does happen, it's going to put us in an incredibly weak position as traders, because you're going to see economic policy that theoretically could follow the same template, but it won't, because Trump's template is sort of his template. So once that is gone, then we're going to start probably reverting back to known economic principles. You're going to see everybody get away from tariffs. You're going to see a lot of things that are very, very different. Our markets will correct. So it's a very real thing. And we were reminded again over the weekend that it was a very real possibility that we could see something like an assassination in the coming years. And that's going to shake the markets. So in those risk assessments, unfortunately, you have to take into account things that are fun, like aliens, UFOs, and things. But you also have to take into account tragedies like an assassination, or like folks right now are predicting big time earthquakes. They're predicting us to get hit with a big earthquake. Japan just had a big one not too long ago that didn't create much of a tidal wave, but they're sort of forecasting another very large one in that region. We've also got a forecast out in California. Now, forecasting earthquakes is almost impossible, and it doesn't really do us a lot to be able to write that into a risk assessment on a Friday. But this is front and center for us right now, and it's something that we have to be able to take into account. So I'm looking at Trump's schedule pretty much every day, seeing what's public and what the big events are. It's unfortunate that we're there, but we're there. This is the way it is. Let me see. If it don't make sense, it don't make dollars. That's for sure, Eli. That's for sure. Let me see. Got a question over here from Ralph H. Would a Trump assassination strengthen or weaken the U.S. dollar? I wish I knew. To be honest with you, Ralph, in one respect, you could say that an assassination would bring about a correction in equities, just because things like the tax cuts, things like the pro-business policy and the deal-making prowess, I guess, of the administration would be compromised. So we could say that stocks would sell off, and maybe that would bring about a series of rate cuts to try to promote economic growth, which would maybe in turn weaken the U.S. dollar. We could also say that if it went like, say, 1968, was it, when Kennedy was killed? Next president that was sworn in was a vice president, Lyndon Baines Johnson, and he went into Vietnam immediately, ramped up all military activity. That could happen too. And if the United States ramps up military activity, say in the Middle East, or expands operations, then the U.S. dollar will strengthen, because we will go back into that deep war type economy, and the U.S. will get the dollar will get bids. So, I mean, it's 6 of one, half a dozen of the other, Ralph. I really couldn't say. It could go either way in my book. It is truly an unknown, at least from where I'm sitting, and that's all the way out here in southwest Montana. I don't know. Let me see, Eli, can we take a look at the Great Britain pound, Japanese yen? Yeah, let's go ahead and cover just some quick odds here on where we sit with the Iran war. Like I said, the negotiations were called off. Trump called back Witkoff and Kirshner. They were supposed to go to Islamabad, Pakistan, and meet with the Iran negotiators this weekend. They didn't. He called it off, so there's no reason to go. And so we are sort of back to square one now. We believe that there's a deal to open the Strait of Hormuz in the works without potentially ending the war in general. Here's our polymarket odds. I've been referencing these relatively regularly, and I think they're valuable in just showing where everybody's head's at. June 30th, they believe you're going to have a permanent peace in place by then. May 31st, 28% chance of having a permanent peace there. I don't know if you're going to get a permanent peace. Remember the Korean War between the United States and Korea. That was eventually just a ceasefire. There never was a peace accord signed. That was just a ceasefire. They drew a line in the sand, divided into North and South Korea, and had a ceasefire. So could this be just a long ceasefire? I think it's possible. I really do. You could see that extended by April 22. I mean, that's already over. We really don't know. We really don't know where everything stands right now. We know that the bombs aren't flying. That's good. That's a positive. We also know that there's probably no plans for a long-term peace deal at this point. You can see Karg Island no longer under Iranian control. It looks like at one time we were talking about going into Karg Island and figuring it out. That's not going to happen. It looks like that's been scrapped. U.S. blockade of Hormuz lifted by May 31st. Most people believe that, 58%. But you'll notice we're still looking at 50-50 chances on a lot of these markets. And that sort of suggests that we don't know. We don't know what we don't know. All right, Great Britain pound, Japanese yen. Let's go ahead and call it a day. Yeah, we got to look at Bitcoin here relatively quickly, too. We had one more thing to cover there. All right, so essentially, well, I mean, you can see exactly what happened here. We had a situation develop where right there you had February's low. It's bottom right in there. February's low, and then since then we had a bit of a pullback, and now the uptrend is just on. So the first thing that I would do is go to a monthly, dial this thing back to a monthly chart, something like that. Get the big picture. So what's happened? Realistically, what's happened? Compression. There's your uptrend, breakout, compression, break. All right, so now we're bullish again. So do we have anything up there that's a big round number? I'd be looking at probably 225 to the top side. That's a nice quarter handle. I like that. Does this coincide with anything? Well, a lot of folks are going to be looking at that level right there from 2008. I mean, help yourself if you want. But look at this pullback zone right around 215.88. You can see that's exactly where our compression is developed. If you believe in things like that, I mean, there's the evidence. It didn't just happen once either. So there's your monthly high for July of 2008, and you're right here with your high there. Boom, boom, compression break. Looks to me like that level's going to be gone. I would be looking at 225 to the top side. As far as how would I want to trade this right this minute, I mean, this would be one of those, Eli, that I would take down to a real small time frame. Pretty much know the big picture. You're moving north. We're broke above 215, so now we're headed north. What happens now? Daily, there was a nice daily right there, pull back, and now we're just sort of grinding north. What could we do? I mean, a couple of things we could do. Are they great trades? Not really. Let's take a look at this low right here. Yeah, that's just a little bit lower. Let's go down to 4-hour chart. This is Chop City. I would wait. I mean, I hate to say wait, but you got to wait here. I would wait and reset everything after the BOJ moves the market tonight or during the early Tuesday session, my Monday overnight. I would wait for this thing to open up just a bit, because if you get in there too early, it's going to be a real challenge to make it work. All right, last story here. More than 100 crypto firms urge Senate to move on U.S. market structure bill. Essentially, there's a bill in front of Congress right now that's going to help the SEC and CFTC clearly define their guidelines and how they're going to govern crypto, protecting non-custodial developers, simplifying disclosure, and avoiding a patchwork of state laws. Basically, they want a uniform way of regulating crypto in the United States. That's going to be good. That'd be good for business. I mean, it really will be. It'll remove a lot of the ambiguity out of there, and the idea there is to provide consumer confidence, bring consumer confidence to the table, and investor confidence when it comes to the SEC and CFTC. The SEC, Security Exchange Commission, they pretty much govern everything. Stocks is the big one. CFTC, they do futures and derivatives, and that's the Commodities Futures Trading Commission. And they want to figure out exactly how both of these bodies are going to work together to govern things like Bitcoin. And by putting that regulatory framework in, even though they may be lax regulations, to have everybody's role spelled out exactly is going to bring confidence and legitimacy to the space. That's all. So in any case, you got right here, spike high, spike low. We've been looking at that sell right up there at 82.750-ish, right beneath 62% for a while now. I thought we had a chance. We were trading up over the weekend. We were trading right at about 80,000, 79.5, and since then we've pulled off a little bit. So still looking to sell from right up here, but you can see this market is in really no hurry to go much of anywhere. All right, everybody, I think that's enough for today. We've covered we didn't cover WTI crude, but essentially what's happening is we're up about 2.3% above $95 and still extremely bullish in what is sort of another unknown phase of the Iran war. Make no mistake, though, the VIX is about at 18.5. The volatility index is very low. The markets are getting comfortable. They're getting comfortable with this war. We saw it happen with Russia-Ukraine. That volatility is all gone now. The big volatility, the big swing in stocks, it's all gone. It looks to me like the markets are comfortable with it. The high oil prices have already all been baked into the cake. The equities are still relatively strong. We haven't seen the big correction. We've actually seen all-time highs. It's an interesting market dynamic. We didn't cover gold either. Nothing's really going on. We're printing 46.82, only down about 0.5%. We'll cover it tomorrow. I mean, gold is just a choppy mess at this point. All right, everybody, I'm going to go ahead and sign off here. Let me see. Eli, oil is bullish on the weekly. Is at 30 to 50%. Well, I mean, it's oil's bullish, period. I mean, when it wasn't, 6 weeks ago or 8 weeks ago, we were trading crude oil at like 68, and now we're at 96. So, we could look at all of our technical indicators. They're all going to say it's bullish. The real question is what can happen from this level, 96.50. You could see a tremendous rally if things go wrong. If you see an oil tanker sunk or something like that, you could also see a big sell-off. You could see a big sell-off if, in fact, a peace comes and the Strait of Hormuz is open and an order comes to the situation. It's anybody's guess. All right, everybody, I've gone on way too long for a Monday. You guys have a fantastic trading session. I think I'm going to adjust the time. We're going to cover that consumer confidence live tomorrow. Maybe go a few hours earlier. I think that would be maybe a little more useful. That's for sure. But Wednesday's the big day. Remember, BOC, Bank of Canada, United States Federal Reserve. I'll have FOMC live for you on Wednesday. And then Thursday's the BOE, the Bank of England. That's another biggie. So we've got a news cycle coming our way. That middle 36 hours of the week is going to be touchy, to say the least. 3 days left in the month. Yeah, right. Bills are due again. All right, everybody, have a fantastic trading session. As always, trade the action well, and we'll talk soon. See ya.